on Bloomberg Radio.
It is the bell of the New York Stock Exchange. It is the opening bell, and it's brought to you, the Bloomberg opening bell, brought to you by BMW of Manhattan. You can't do better than BMW of Manhattan, 57th and 11th and 67 Wall Street, BMWNYC.com. I said John Tucker yesterday, I missed Manhattan when I said the BMW of Manhattan billboard. We were up in New Hampshire, and I felt good saying 57th and 11th and 67 Wall Street. And I just got a lovely note from Wally listening on Sirius and XM up in New Hampshire. And he says, yes, it was a big yawner, the primary, but he has a lovely quote here about, we like to meet candidates without walls of handlers, mobs of media, and all those out-of-state crowds who get the best seats and ask all the questions at town hall events. I thank Wally for that. Let's also go now to Richard Beauvais, Rockdale Research, who also likes to avoid walls of handlers and mobs of media. Dick Beauvais, good morning.
Good morning, Tom.
I don't know if you read Vikram Pandit's op-ed in the FT. Very important today, apples versus apples, a new way to measure risk. And let me just describe Mr. Pandit's difference, folks, as a CEO out of India, a very successful family, a bachelor's and a master's in electrical engineering from Columbia, a PhD in finance, his thesis, asset prices in a heterogeneous consumer economy. This isn't the normal CEO, is it, Dick Beauvais?
No, and I think he's a CEO who's done a superb job in the period that he's been at, Citigroup. I think that the only mistake I think he made was the reverse split of the stock. Other than that, I think just about every decision he's made to revivify that company is correct.
I never give my opinion. I will now quote rule number 147 of stock splits is never do a reverse split, taking it from $2.98 out to $29.85. Why are reverse splits a bad idea, Dick Beauvais?
Well, essentially, they do nothing to change the fundamentals in operating the company, and therefore, unless those fundamentals are improving, the stock is simply going to drop back down in price, because people who may be reluctant to sell it at $3 will certainly be willing to sell it at $30. So I think that, since Citigroup's fundamentals had not improved enough to justify a reverse split, it made no sense for shareholders.
The op-ed, I read every word of it coming from Dr. Pandit, and when you look at this idea of finding a common reference to yearly or quarterly manage risk, it sounds interesting. It sounds almost William Sharp at Stanford, a benchmark portfolio. It's very CFA-y, a benchmark portfolio that every bank would judge against. Does that have value, Dick Beauvais?
Yeah, I hate this stuff.
Why did I know that would be the answer?
I think what we're doing in the banking industry is almost moving to the old Soviet Union, where, in essence, we have this group of people sitting in Switzerland who are going to tell the whole world how to run their banks by establishing a series of parameters on capital and on, essentially liquidity and on risk-weighted assets. In the method in which they establish these risk-weighted assets, they're basically directing fund flow. So to me, we're moving toward, if you will, a centrally planned financial system. I don't think that makes sense. I think that what we need is what we had before all these guys got involved, which is, a free market situation where these banks are able to go where they think is appropriate, and if they make bad loans, they're going to go out of business.
That's not a utility, is it?
No, it's definitely not a utility. And I think that one of the things that I've been looking for, and I think I finally found it in a bookstore in London, is Treasury Secretary Brady's report to the President back in 1991 concerning the state of the banking industry. Because in that report, Mr. Brady argues forcefully that the problem with the American banking system in 1991 is that the banks in the United States are too small, and that because they're too small, they're not able to assist the growth in the U.S. economy. And unless we get bigger banks in the United States, the Japanese and the German banks are going to overwhelm the system. And American corporations are not going to be able to compete with the corporations in Japan and Germany. Now, Mr. Brady, if you can get him on the program, it would really be good, has changed his views concerning that, what was written in that report. But there is a lot of truth in what he wrote.
Yeah, but so what Mr. Pandit discusses here, which is visible banking versus, and I use this phrase with respect, shadow banking or things that we can't observe, do you feel that the future of our banking can combine the two, or do we need to be discrete and have two separate sets of rules?
Well, the point is that the rules that have been established to this point, and this is really what Mr. Pandit is getting at, have constrained the banks in terms of the way they operate, but have left this whole free open market, I'm going to call it the MF global market, unrestrained, unregulated, uncontrolled. And therefore, what he's driving for is a uniform system which would constrain everybody who's in the financial market. And I think that, he's right in the sense that if we put the rules through as we have to this point, what we're doing is forcing business out of the banking system and into the shadow banking system. So instead of getting better control of this, we've accomplished nothing. And I think what Mr. Pandit would like to see is a uniform system that affects all companies that are in the financial sector, which I don't believe should be done at all.
Institutions would be required to produce on a quarterly basis for that benchmark portfolio a hypothetical loan loss reserve level, value at risk, stress test results, and risk-weighted assets. Just so everybody knows, I got my first gray hair studying value at risk. This stuff is, you mentioned the Soviet Union, and good morning to everybody listening in Russia, but I'm sorry, Dick Beauvais, the floors of bureaucrats employed to do those 90-day measurements, I don't think there's enough office space in New York to do that, is there?
Well, I agree with you because, essentially, think about what they want, what he wants done. He wants a whole new layer of accounting to be put on top of the accounting that is currently in the industry. And the accounting in the industry right now is among the worst anywhere in the world that anyone ever thought of. Why? Because no one can look at a bank statement any longer and get a feel for how cash is moving through that company. No one can do what the SEC requires, which is to figure out what did that bank actually earn in that specific time frame, quarter, year, what have you. The reason why they can't is because we've set up something called reserves. On an accounting basis, there are no reserves whatsoever in the banking system in the United States or anywhere else in the world. There are no reserves. And yet we talk about this accounting thing, reserve, all the time. We set up things called CVAs and DVAs, which, again, are accounting conceits that have nothing to do with the way the business is being run in a specific period. And now what we're supposed to do is come up with a whole bunch of new numbers. We do have risk-weighted assets indicated every quarter. We do have capital indicated. We do have a lot of the things that Mr. Pandit is asking for. But this desire for uniformity in a business which is supposed to be driven by risk, in my view, it makes no sense. In addition to which, I simply don't believe it could be done.
Dick, I want to get one more question here. We're going to come back with you. Which banking system approaches Mr. Pandit's wish of a benchmark to go against? Is this a Canadian model? Is it a New Zealand model? Is there an experiment out there that has shown this to be successful?
Unfortunately, it's gone beyond my knowledge base. I don't follow these foreign systems other than Switzerland, where I look at the two banks there, and there is no system in Switzerland. There is none in England. There is none in France or Germany or Italy. So I'm not aware of any place that such a system exists.
Let's come back with Richard Beauvais, Rockdale Research. I want to talk to Dick Beauvais about the other side of this analysis, which is away from value at risk or stress test results. What are the strategic practices of our banking system or our shadow banking system that will keep us away from the buildup of leverage and the disasters that we saw from a successful '06 and part of '07 into the disaster of '08 and '09 as well. Bloomberg Surveillance were brought to you by Merrill Lynch, wealth management and an approach that can help turn your vision for the future into a reality. That's the power of the right advisor. Go to ml.com/future. Merrill Lynch Wealth Management products and services offered by Merrill Lynch, Pierce, Fenner & Smith Incorporated, and other subsidiaries of the Bank of America Corporation. We look at equities, bonds, currencies, commodities. Yields have come in nicely, 3 beeps in, 1.94% in the 10-year. The Dow, negative 50, 12,415. The VIX, 21.19. In the euro, now under 127. A weaker euro decidedly today, 126.96 on the euro. Spreads in Europe, actually a little better. It is an odd screen, is how I would put it. Today, Brent crude 113.05. Bloomberg Surveillance, we're powered by Dunkin' Donuts. America runs on Dunkin'.
Order filled.
This is a Bloomberg Business Week update. I'm John Baskin. 3D Systems Corporation, a maker of 3D printers that can cost as much as $950,000, is rolling out cheaper products and services that could let consumers print out plastic Barbie dolls and bike parts at home. For more than 20 years, 3D Systems sold printers that layer materials to create real-life objects, everything from vases to machine components. The devices have been used by manufacturers such as Apple to build prototypes of products. While a few hobbyists have splurged on this technology, 3D printing is getting cheap enough to appeal to consumers and could transform the way some consumer products are delivered. Rather than having to buy a replacement part at a store, users could simply print them out. The company says this technology will end up in your kids' rooms and on the factory floor. For more on this story, go to businessweek.com. I'm John Baskin.
In private aviation, you get what you pay for. Only NetJets delivers the highest safety standards, most experienced pilots, world's largest fleet, global operations, and the unmatched resources of Berkshire Hathaway. Perhaps that's why more people choose NetJets than any other fractional jet provider. For the best value in private aviation, call 877-NETJETS or visit netjets.com. NetJets, the only choice for those who choose only the
Order
best.
filled.
What makes professional traders and investors around the world successful? They are savvy. They do their homework. They look for the best deal. And they find it at Interactive Brokers. Interactive Brokers' platform and services have been designed specifically for employees of financial service firms. Interactive Brokers, stocks, options, futures, forex, bonds, worldwide, from one account. See interactivebrokers.com for more information.
With the Bloomberg Business of Sports Report, I'm Charlie Pellet. A super yacht builder has been sold to a Chinese bulldozer maker. Ferretti Group was sold to the state-owned parent of China's biggest bulldozer maker, putting the communist nation in control of the world's largest luxury yacht builder. Creditors will sell 75% of Ferretti for $228 million to Shandong Heavy Industry Group. State-controlled Shandong Heavy plans to add super yachts to its construction and farming products after surging economic growth boosted China's number of millionaire households 31% in 2010. According to a statement, Ferretti will maintain its existing management as well as its headquarters and production facilities in Italy. Ferretti's yachts, by the way, can cost more than $100 million. That's the Bloomberg Business of Sports Report. I'm Charlie Pellet.
Hi, this is Kenny Chesney for RAV. There are a lot of things we have no control of in life, but that doesn't include drunk driving. Be smart. If you drink, don't drive. Think ahead and choose a designated driver. Remember, music lives, and so should you.
Why is Willoughby's the perfect place to buy a Leica camera? Just ask our customers.
Photography is not just a hobby, it's a passion. When we go to Willoughby's, we experience the bond between photographer and camera. We want to touch and feel, and we want to know that the people working with us are knowledgeable, trained salespeople, and we get that feeling at Willoughby's.
And for more on the most exclusive camera manufacturer in the world, here's Leica Marketing Manager Christian Earhart.
Leica is a premium camera brand, precision engineered in Germany for photography enthusiasts. Our optics are second to none, and Willoughby's on 31st and 5th is the only Leica boutique in New York City, featuring our full selection on display. And with Leica cameras and binoculars starting at around $700, it's an affordable luxury everyone can appreciate.
Visit the Leica boutique at Willoughby's and see the full selection of German precision-engineered Leica camera equipment. Willoughby's, since 1898, New York City's boutique camera store at the corner of 5th Avenue and 31st Street.
Time now
Order
for Bloomberg
filled.
Travel Weather. A look at conditions from around the country from the Bloomberg Weather Center.
Should be another good day to be traveling to or from the New York City area with lots of sunshine in the forecast. High temperatures in New York today are going to be around 46 degrees. Boston will enjoy sunshine today. It'll be a little colder in Boston. Highs will be near 37. If you're headed to or from Washington, increasing and thickening cloudiness through the morning. Rain will arrive during the afternoon. Highs in Washington near 45. Charlotte, scattered showers for today. Temperatures will be near 58. There may be some delays because of the rain. There'll also be some rain at times today in Atlanta, and that will lead to delays. Temperatures near 61. Showers and thunderstorms will develop a little later today in Tampa. There could be some delays. Highs near 72.
We bring you travel weather reports every half hour. You're listening to Bloomberg. On the air, on the internet, on your mobile device. There's absolutely no alternative.
From Bloomberg World Headquarters in New York, I'm Bonnie Quinn with this Bloomberg Radio Business Flash. It's brought to you by FRM Certification. Learn how to join the 21,000 elite professionals who are certified financial risk managers. Visit garth.org today. Mixed sessions so far. The S&P 500 down about 0.2%, 2.25 points to 1289. The Dow Jones Industrial Average down 0.25%, 28 points to 12,434. The Nasdaq 100 though up 0.1% this morning. Stocks still lower in Europe, just a couple of hours before the close. The euro 0.6% weaker at $1.2704. Microsoft down 0.2% at 27.67 after forecasting PC shipments in the fourth quarter didn't meet analysts' forecasts. And Urban Outfitters, it is down almost 20% now, 23.58. As said yesterday, CEO Glenn Senk resigned effective immediately and named the founder, Chairman Richard Hayne, to the post. On the economy after 10 Eastern for conversations with Dr. Holger Schmieding and Stephen Gallo on foreign exchange. Tom.
Bonnie Quinn, thanks so much. Again, a mixed Dow, the NASDAQ 100 actually up, but just a little bit. It's a bit of a goofy data screen. Dick Beauvais with us as we talk about, for anybody worldwide, good morning from Global Wall Street, Vikram Pandit, the quant finance PhD. He runs a small shop called Citigroup. Apples versus apples, a new way to measure risk. Dick Beauvais, 267,000 people at Citigroup as of the end of September. Meredith Whitney was on recently looking for another 100,000 so bodies globally out of the financial sector. What size will Citigroup be in, say, 5 years?
Oh, I think it'll be much larger than it is today. I think that, basically what Citigroup is attempting to do is expand the company globally. It's not trying to expand that dramatically in the United States, and it's attempting to shrink its way out of New York. But in terms of moving into, other regions of the world, it has this program, for example, at the present time to go after the 100 MSAs in the world that are the biggest and where the most, financial activity is occurring. That means building branches. It means adding people. It means committing funds to those sectors. So Citigroup is not going to shrink. I mean, certainly the financial industry, in my view, is going to shrink by about 150,000 people over the next 12 to 18 months. But I don't think that you're going to see over a 5-year period a retrenchment of anywhere near that size.
If I went to MSA, Metropolitan Statistical, whatever it is, a unit, whatever it is, number 32, which let's say it's on a continent, not North America, and I went to there, what is the distinction going in between Citigroup and J.P. Morgan?
Well, J.P. Morgan does not want to get involved in retail banking anywhere in the world to the degree that it can avoid doing so. And Bank of America feels the same way, and so doesn't Wells Fargo. Citigroup does. Citigroup wants to do business with people and small businesses all over the world. And it's setting up a system to focus on those cities where the greatest number of people are with the greatest amount of wealth, and it wants to get at those people and that wealth. J.P. Morgan wants to do capital markets business. It wants to trade, currencies, commodities, securities everywhere in the world. It wants to do investment banking everywhere in the world. Certainly, Citigroup wants to do that also, but there's a huge difference. Citigroup wants to work with the people in these countries. J.P. Morgan does not.
Let's get back to the heart of this essay, which is, in your approach, it speaks to the Soviet Union, very strong language, looking at loan loss reserve levels, value at risk, stress test results, risk-weighted assets. There's lots of Greek letters in there that Mr. Pandit and maybe Mr. Beauvais understand. But it is about strategy. If I'm M&T Bank up in Buffalo, or, the bank that Vinny Del Giudice is going to bank at in Denver when he moves out there, Dick Beauvais, other bankers are looking at Vikram and saying, wait a minute, we don't need to do this, aren't they?
Exactly right, because they believe that they've established systems that are effective in engaging risk for their own businesses. In other words, let's assume a bank is solely in the mortgage industry, which, forget the last couple of years, historically has generated losses well below 25 basis points per amount of loan. Another bank is involved in, if you will, commercial lending, which historically generates losses of 150 basis points. To try and put them into a mold where they have to look at risk in the same fashion and set aside the same amount of reserves on an accounting basis and to make assumptions as to what their capital and liquidity is, I don't think is correct. Because, number one, I do not think that risk by its very nature can be quantified and categorized and put into a formula or a system. And I don't think, therefore, that making an attempt to do that makes any sense.
Given the politics of the moment, some of which we witnessed in New Hampshire here in the last 48 hours, why can't we cordon off or ring fence these tangible risks into a non-bank system, and they can play under their own rules just as long as we know the risks are there, and end up with a banking system where we can actually quantify the stuff you're worried about?
Yeah, because we don't know what the risks are. And again, I'll go back to housing. Housing has traditionally been the safest investment that any bank could make for 60, 70 years going back to the Depression. Therefore, the amount of reserves set aside, liquidity requirements, capital requirements, risk-weighted asset requirements against housing have always been extraordinarily low. Now, all of a sudden, we come to this 2008 crisis, and housing is where the risk lies in the banking system. We'll go to Europe. No one would have figured that sovereign debt was where the highest risk was in looking at the European situation.
We just don't know.
Yeah, so we can't quantify or categorize what we don't know.
One last question, if I can, Dick Beauvais, and I think it's the single sentence of the Pandit essay. It's so important. The best solution is not to mitigate panics, but to aim to avoid them. The laureate Michael Spence has spoken about this numerous times, about the Type 2 construct of what not to do. For example, Ken Lewis was a genius because he didn't go into Asia when Asia blew up. It was what he did not do. We need to aim to avoid these risks. Can we actually do that, what Mr. Pandit desires?
No, there's no likelihood of it whatsoever. In other words, we'll go back to the 1972. No one knew that the oil price was going to go from $2.50 a barrel to $15 a barrel and then on upward. No one understood that could happen. No one knew about it, and therefore it could not have been considered or set aside for against. Or we can look at the housing thing I just mentioned or the sovereign debt thing I just mentioned. We do not know where the next risk is coming from, and because we do not know where it's coming from, we cannot prepare for it.
Dick Beauvais, fantastic. Folks, if you'd like to hear more of this conversation, Bloomberg Radio Plus on iTunes at the App Store and across all of our Bloomberg systems. This issue is so important to global Wall Street. We will recapitulate this 12 noon today, Bloomberg Television, Surveillance Midday, Dick Beauvais, and joining us will be Christopher Whalen. I got goosebumps thinking about this. This is total dork, quantitative finance. I hope you've enjoyed it. We're going to do it again at 12 noon. Dick Beauvais, thank you so much. The Dow, negative 40, and the S&P 500, negative 3. Let's go to the Treasury Building and Vinny Del Giudice. Oh, no, wait a minute. He's here. You're in our world headquarters.
Yes, I took the bus up, saved a few dollars.
Did you?
Took the Greyhound up, Tom.
I thought now what are you doing? You're leaving?
Right.
All of our listeners know you from the Treasury Building.
Right. I'm in training right now for a new job with Bloomberg First Word, our new market service. I'll be working out of the Denver Bureau, the new Denver Bureau, but I'll also be continuing my reports on the radio about the U.S.
Does Secretary Geithner know this?
I haven't informed him yet, but I'm sure he'll miss me.
We would all suggest that you are irreplaceable.
Thank you.
Describe for our listeners your vast office in the Treasury Building. There's a cash room, which is one of the most famous rooms in the country.
Ulysses Grant had his inaugural ball there.
It's a gorgeous room.
It's a gorgeous building, but I'm in a corner where probably Civil War soldiers bivouacked in the 1860s. As a matter of fact, there's still some graffiti on the wall that would suggest as much.
Folks, you have to see this. It's like the scene in the West Wing where they send the kid down to the bottom of the White House, and he's next to the furnace.
We still have provisions from the bomb shelter days, civil defense provisions available.
They had that up in New Hampshire the last 48 hours as well. What have you learned? How many years have you been at the Treasury?
I've been at the Treasury since February 1990, first with United Press, and then I joined Bloomberg later that year. 21
years. Which Treasury Secretary was the most pleasant to bounce off of in the hallways?
Oh, pleasant? Oh, I'd say O'Neill and Snow. They were pleasant. Rubin too. So the three of them. The other ones, they were a little bit more aloof.
I would say there was a bustle when I visit the Treasury. It's a back and forth. Just quickly here, what does our audience need to know about how the Treasury runs day to day?
Well, it's an old building, and we used to have a rat problem. But after many, many years, they've managed
now you're leaving.
Yes, I'm leaving. And as Secretary Rubin once told me, the two-legged rats are up on the third floor where his office was, and we had the four-legged ones in the press room.
I'm thrilled to have you here. Vinny Del Giudice, usually in Washington. He is at our world headquarters and will give us more value-added Vinny Del Giudice services from our news bureau in Denver, Colorado. The Dow, negative 48. Tomorrow on the program, what a program. Mickey Levy of Bank of America, Neil Kashkari on equities from PIMCO. We're going to look at retail as well, and Peter Elliott will tell me which restaurant to avoid this January. We're produced by Emily Hosconsel and Richard Truman. Ken Celio, Global Technical Director. It's been Bloomberg Surveillance.
Around the clock from around the globe, this is Bloomberg Radio. Time for a market update.
Stocks lower in the first few minutes of the trading day. From Bloomberg World Headquarters in New York, I'm Bonnie Quinn. The S&P 500 down more than 1/3% now, almost 5 points to around 1287. The Dow Jones Industrial Average down 0.4%, almost 50 points to 12,414. The 10-year U.S. Treasury is yielding 1.93% this morning. The euro weakening below $1.27, and crude oil futures down more than $1 to just above $101 a barrel. Fitch Ratings said today the European Central Bank needs to be more actively engaged in solving the European debt crisis. Fitch's David Riley, head of Sovereign Ratings, said European countries need a credible buyer to combat the crisis. Here in the U.S., the beige book is due from the Fed at 2 p.m. Eastern. And MetLife said it will shut its home mortgage origination operation, cutting most of the unit's 4,300 workers. It'll cost the company at least $90 million. Microsoft lower after forecasting PC shipments didn't meet analyst forecasts in the fourth quarter. That's the Bloomberg Market Minute.
We bring you these extra market minutes every half hour. And of course, we'll continue to keep you covered with our business flashes and news updates. Right now, less than 1 minute before the top of the hour. From the financial capital of the world, via satellite radio and on Bloomberg.com, this is Bloomberg Radio.
From
Bloomberg World Headquarters in New York, I'm Karen Moscow with a Bloomberg Radio Business Flash. It's brought to you by Merrill Lynch Wealth Management. To understand the retirement hurdles and opportunities facing younger Americans, go to ml.com/retire. Merrill Lynch Wealth Management products and services offered by Merrill Lynch, Pierce, Fenner & Smith Incorporated, and other subsidiaries of Bank of America Corporation. Stocks are falling, snapping a two-day advance for the S&P 500 as Microsoft declined, and amid concern that Europe's debt crisis will stifle global economic growth. Dow Jones Industrial averaged down 0.5% or 55 points at 12,407. S&P 500 down 0.4% or 5 points at 1286. And the Nasdaq down 0.33% or 8 points to 2693. The 10-year Treasury is up 12/30 seconds. The yield 1.92% and the yield on the 2-year 0.23%. NYMEX crude oil down 1.1% or $1.10 to $101.13 a barrel. COMEX gold is up 0.33% or $5.90 to $16.37 an ounce, and the euro's $1.2675. The yen 77.01. Microsoft down 1.25%. It's at $27.49 after saying industry-wide sales of personal computers will probably be lower than analysts projected. Hollywood's effort to sell digital copies of movies got a boost when Amazon.com, the largest online vendor, agreed to use the industry's common system for storing and streaming films. Bill Carr, the Seattle-based company's executive vice president for digital media, said yesterday at the Consumer Electronics Show in Las Vegas that Amazon is working with an unnamed studio to offer movies in the ultraviolet format. Amazon is the first major retailer to commit to using the platform. In other news you need from around the world, Mitt Romney heads for South Carolina, the front runner twice over, and his opponents are firing all the harder at his track record at Bain Capital. Bloomberg's Irv Chapman has more from Washington.
A documentary film created by a supporter of Rick Perry and circulated in South Carolina by supporters of Newt Gingrich depicts Romney as a corporate predator, as did Perry speaking to a South Carolina audience.
They're just vultures. They're vultures that are sitting out there on the tree limb waiting for the company to get sick. And then they swoop in, they eat the carcass, and they leave the skeleton.
Romney said the accusation reeks of envy and class warfare, which he expected from President Obama, but not from fellow Republicans. In Washington, I'm Irv Chapman, Bloomberg Radio.
In sports, the New York Knicks host the Philadelphia 76ers tonight. The New Jersey Nets in Denver, they play the Nuggets. And in the NHL, the New Jersey Devils on the road to play the Edmonton Oilers. Coming up at noon on the Hayes Advantage, Kathleen speaks with Chuck Gabriel at Capital Alpha Partners about the attacks on Mitt Romney and what that means to Wall Street and voters in South Carolina. And that's the news you need now more than ever. I'm Karen Moscow. It's time for Bloomberg on the Economy with Sarah Eisen and Michael McKee.
This is Bloomberg on the Economy. I'm Michael McKee. She's Sarah Eisen. It's kind of a quiet day today. We're digesting the New Hampshire primary results, a rather small meal. One main course and a lot of little side dishes that didn't go very far, aren't very filling. But we're going to talk more about that in just a moment.
Some Euro-negative headlines.
Some Euro-negative headlines today, indeed, pushing the single currency down to levels we haven't seen in about a week. But before that, you had to go back for a while.
And we're seeing stocks over in Europe drift a little bit lower. Nothing extreme. U.S. following in its footsteps. Got some comments out of David Riley, who manages the sovereign desk over at Fitch Ratings, saying the European Central Bank needs to step up its bond purchases. Just adding to some concern there that the crisis is still raging.
You can just imagine Mario Draghi sitting there going, oh, thanks for the advice. We hadn't thought about that.
Well, he does come out in 24 hours.
He did, yeah. Well, that's the whole thing. Tomorrow morning, tomorrow at this time, we will be talking about what they did.
Or what he said.
Or didn't do, and what he said. No place more important than the press conference to be tomorrow in Frankfurt, I guess. So we'll be talking about that coming up later in the program. You mentioned European stocks drifting sideways, down a little bit, kind of the same thing this morning. Although Dave Wilson, who's here tracking all this for us, we've seen this the last couple of days where we start off on this program talking about, stocks starting off lower, and then they kind of drift up through the day, and about 3 o'clock they make a decision on what they're going to do.
That's pretty much the story, at least what we've seen lately. Yeah, we have some dribs and drabs of earnings to get through and other sort of influences, concern about what's happening in Europe and how it may affect the global economic picture, certainly part of the mix. I mean, one company you can point to today as far as earnings go, Lennar, the home builders, up 2 3/4%. Sure, their profit was down, but it was pretty much in line with what analysts were looking for. And we're talking about the fiscal fourth quarter that ended in November in their case. Probably a bigger concern for investors, what Microsoft had to say about personal computer sales late yesterday. A couple of their executives spoke in Las Vegas, where the Consumer Electronics Show is going on, and talked about how PC sales probably were worse than analysts' forecasts in the fourth quarter. And Microsoft, the world's biggest software maker, so they ought to know. Companies citing flooding in Thailand, an issue that has cropped up in the past few months, slowed the production of hard disk drives and related parts. So we are seeing technology shares lower as a group, though energy producers are actually the worst performers in the S&P 500 at the moment. You've got a couple of disasters du jour to get through.
I'm looking at Urban Outfitters.
That's one of them, Sarah, no question. Shares down 19%, and that all has to do with the resignation of Glenn Sank as Chief Executive Officer after a year-long decline in profit. Now, Sank had been with Urban Outfitters since 1994 when he took charge of the company's anthropology division, and he had been the CEO since 2007. A lot of the analyst commentary saying that with him out of the picture, it's going to take a while longer, perhaps, for Urban Outfitters to turn around its business. And so that's a real concern there. You've seen downgrades today on the stock at Robert W. Baird and Citigroup. Actually, Citi cutting its rating to sell on Urban Outfitters in response to the CEO's departure. The other disaster du jour, a company called Hecla Mining. They're a silver producer, and they're down almost 22%. The issue there, well, U.S. regulators ordered the company to close a shaft at an Idaho mine to remove built-up material, and as a result of that closing, which they expect to last through the end of the year, Hecla cut its output projection by about 24%. So silver prices may be higher, but Hecla's not in a great position to take advantage of that. I'll give you one more stock that's had a pretty rough go in early trading. Super Value down 10.5%. Supermarket chain reporting fiscal third quarter profit before some items of 24 cents a share. Penny less than the average estimate in the Bloomberg survey. Sales at $8.3 billion were also a bit below projections. And when you figure in those items, the company actually had a loss of $750 million in the quarter. I suppose if I had to leave you with one bit of good news, though, Crocs would be it. Their shares up.
Now, we haven't heard good news from them for a while.
Well, their shares are up about 9.5%, and actually. Fourth quarter revenue, company said late yesterday, was at the high end of an earlier estimate, $200 to $205 million. And also, they talked about annual sales exceeding $1 billion last year for the first time. So some good news out of Crocs, but some tough news from other companies to digest here, Michael.
I don't know. I guess we should ask Karen and Sarah. Crocs still fashionable? I mean,
I didn't think they were ever fashionable.
They were they were sort of acceptable, were they not?
Not to me.
They were popular, though. I never actually.
They look like clown shoes. They're goofy. They're good for kids.
But then they changed them, and they made really nice sandals. I tried on a really nice, comfortable pair of sandals last night.
I guess I don't opt for comfort, do I?
No. Anybody who's seen your heels would know that's not high on your list.
No.
So, all right. Well, we'll keep an eye on Crocs. And interesting story. And you get those little things you can stick in the holes, right? Those little. I don't know if the price.
Yeah, I think they're acceptable for children. Let's leave it there.
Said no. I'm not gonna go there. Okay. Thank you, Dave Wilson. We were talking about the New Hampshire primary and interesting case this morning. We finally get. We didn't have this in Iowa, but we have some extensive exit polling coming out of New Hampshire. The big issue. Oddly enough, and I say this oddly enough because ordinarily the economy is always the big issue. It's the economy stupid. But in New Hampshire, unemployment's 5.2%. The state is not hurting.
But it still was the economy.
But it was the economy. 60% of the voters say that's why they made their decision. Now, you were talking with our political director, Matt Dowd, this morning, and he thinks this is going to carry over to South Carolina, that Mitt Romney's going to have going to be able to make that case.
That he is the man for the economy. I mean, this is what he's been campaigning on. This is his private sector experience at the helm of Bain Capital for 14 years, and right now it's sort of it's also being attacked by his political rivals. How many jobs did he create? How does private equity really work? But it seems like New Hampshire voters, at least, were not fazed. Among that 60% who cared about the economy, Romney won by a 2-to-1 margin. The question is, now that there's 10 days to attack him on that, how does it all play out in South Carolina?
Well, and the issue in South Carolina is that it is a tale of two states, because South Carolina is not only experiencing 9.9% unemployment, it's got some economic problems, but it is also a very culturally conservative state. And many of the past Republican primaries, particularly 4 years ago, have been fought on that issue of social conservatism as opposed to the economy.
Yeah, and Matt Dowd says this will be his big test, but he's pretty confident, and part of it could be the fact that the opposition isn't stronger than he is.
That's one of the problems. Well, what we want to do, and we're not going to have time because you and I managed to chat our way through this whole period here, is we're going to bring back somebody who was just on the radio with us, John Sylvia from Wells Fargo, which is conveniently located just across the border from South Carolina in Charlotte, North Carolina. And he's somebody who's very familiar with the area. And we are not going to ask him social questions, but we will ask him about the economy of the region and how the whole economy may play into the elections. And you know, what's interesting, and John's writing about it in their most recent economic outlook, how Washington plays into the whole election campaign, how the politicians play into it with what they do, or what they the year in 2011 didn't do.
And not to mention the Federal Reserve getting to be a campaign issue, coming under some political fire lately on a potential next move. Getting involved in the housing market? We'll talk about that.
Even members of the Federal Reserve throwing the Federal Reserve under the bus today. Very interesting comments from Jeff Lacker down in Richmond. Well, this is Bloomberg on the Economy. We'll be right back here on Bloomberg Radio.
Time now for Bloomberg Travel Weather.
Business travelers, if you're headed to or from the central United States, the weather will cooperate around the Houston area today. Abundant sunshine and warmer, highs near 70 in Houston. San Antonio will have sunshine, highs near 75. The Dallas area will be considerably warmer today, sunny, 68. Partial sun near 68 today in New Orleans. Kansas City is going to be mostly cloudy, turning colder, highs near 45. St. Louis, chance of showers 52. Temperatures may fall by late today. Chicago will be sunny and near 50. Minneapolis, scattered snow showers, colder today, 35. Detroit's going to be mostly cloudy. Temperatures going to be near 46. Headed to or from Memphis, scattered showers today, 52. Showers are in the forecast for Cincinnati. Highs in Cincinnati today near 47 degrees. The rain will arrive this morning. In our next report, we'll take a look at the travel conditions across the western United States. I'm Bloomberg meteorologist Rob Carolyn.
Attention financial professionals, hedge fund managers, and investment advisors. You've worked hard to get where you are. You have wealth that you want to protect from creditors and litigants and pass on to your family with minimum taxes. But lately investors are filing lawsuits based on investment losses, and now the government may investigate your professional activities. To protect yourself from frivolous claims from disgruntled investors, business associates, or government agencies, you must protect your assets legally by consulting a qualified asset protection attorney. The law firm of Rubenstein & Rubenstein will create a legal asset protection plan tailored to your needs. To discuss domestic and offshore asset protection, call Rubenstein & Rubenstein at 212-888-6600. Using our domestic and offshore expertise, we will legally protect your assets from litigants, creditors, even the government. You will control your assets, but they will be completely protected. Visit us at assetlawyer.com or call us now at 212-888-6600. 212-888-6600.
Now it's time for the anatomy of the economy. Our daily look at essential measures of economic activity only on Bloomberg Radio. Here's Tom Keene.
In this edition, we look at the Case-Shiller Home Price Index and also the OFEO Home Price Index. I'm joined by Global Insight Chief U.S. Economist Nigel Galt. Nigel, the S&P Case-Shiller Index, it's become popular quickly, hasn't it?
It has indeed. Historically, there hasn't been a lot of good data on house price changes, and Case-Shiller is changing that. It's a good index of the change over time in the price of the typical single-family home.
20 metropolitan areas. Does Case-Shiller re-emphasize that all real estate is local?
It does emphasize that you have to look very carefully across the regions. It is true, there is no national house price market, a collection of regional ones.
The common feature of Case-Shiller and Ofeo, O-F-H-E-O, is that they measure the same house and the sale and purchase of that house over time. But the Ofeo index doesn't take into account more expensive homes, does it?
That's right. The Ofeo index only measures homes with mortgages that have been sold to one of the government-sponsored enterprises, Fannie Mae or Freddie Mac. It excludes so-called non-conforming mortgages, which historically have been mortgages larger than $417,000.
It shows the value of new indices coming out. Do you feel, all in all, that there's enough housing data?
I think we've got pretty good data on house prices now with these two indexes. I'd really love to see better data on the activity side, particularly better data on new home sales. The data we have is just incredibly volatile and subject to revision.
He's Nigel Galt, Director of Research at Global Insight. That's today's look at the anatomy of the economy. I'm Tom Keene, and this is Bloomberg on Satellite Radio.
15 minutes is half a sitcom that might get you a few laughs. 15 minutes with Bloomberg Radio gets you.
Today's market action is that treasuries are rising.
David Malpass, he's the president and founder of NCMA Global.
President Barack Obama saying that the United States remains truly a AAA credit.
We've got John Corpina. He's the senior managing partner, Meridian Equity Partner.
Invest 15 minutes. Bloomberg Radio. There's absolutely no alternative.
It's 10:16 on Wall Street. This is Bloomberg on the Economy. I'm Michael McKee, along with Sarah Eisen and Karen Moscow. And Karen, no sooner did Dave Wilson and I finish talking about how stocks start off lower on this program and then start to head up, then stocks started off lower and have started to head up. We're still down, but the trend is our friend at the moment.
Yeah, and as you said, those still lower off the session lows. S&P 500 down 1/3% or 4 points, Mike, to 1287. The Dow Jones Industrial Average down 1/3% or 43 points at 12,419. The Nasdaq's down 0.2% or 5 points to 2697. And this is on concern that Europe's debt crisis is going to stifle global economic growth. This update brought to you by Merrill Lynch Wealth Management. For an in-depth look at how women can plan for the retirement they want, go to ml.com/retire. Merrill Lynch Wealth Management, products and services offered by Merrill Lynch, Pierce, Fenner & Smith Incorporated and other subsidiaries of Bank of America Corporation. 10-year Treasury is up 12/30 seconds. The yield 1.92% and the yield on the 2-year 0.23%. NYMEX crude oil down 1.1% or $1.11 to $101.12 a barrel. COMEX gold up 0.4% or $6.80 to $16.3830 an ounce. The euro $1.2683. The yen is at 77. And 8 of the 10 groups in the S&P 500 are falling as energy shares had the biggest decline, down as a group by about 1.2%. Microsoft, it's down about 0.5% after saying industry-wide sales of personal computers will probably be lower than analysts projected. In sports, in the NHL, the New Jersey Devils on the road to play the Edmonton Oilers. In the NBA, the New York Knicks host the Philadelphia 76ers. And the New Jersey Nets are in Denver to play the Nuggets. Coming up at 12:30 on the Hayes Advantage, Liz Ann Saunders of Charles Schwab.
All right, Karen, we're here with John Sylvia, special guest in studio, chief economist at Wells Fargo, joining us here from North Carolina. And you just heard the big setup that Michael McKee gave about the primaries coming up in South Carolina and the fact that the economy is really taking center stage. It always has been center stage, but here where we're looking at a 9.9% unemployment rate, higher than the national average and almost double that of Iowa and New Hampshire, clearly this is going to be the top issue. So what's it like down there in the economy? And, do you see it every single day? And what more can you tell us?
Well, in the interest of full disclosure, of course, Michael was talking about digesting New Hampshire's results, and I noticed a serious bowl of popcorn here with that you folks digest during the show, so it's rather interesting. So Charlotte is a major media market for reaching into South Carolina, and I split South Carolina in 2 different ways. There's what we call the upstate area, which is Spartanburg and Greenville, and that is driven by BMW, Michelin, high-tech manufacturing, doing very well, thank you very much. And then there's Charleston along the coast, a lot of tourism. But in between are places like Florence. And you have an economy that really is split in different ways, where you've got a lot of high-tech working very well, tourism doing well, but in the middle is the old textiles, old manufacturing, and that is continuing to struggle. And that generates a lot of that high unemployment that you see. So that's what we're looking at in South Carolina, a very split economy.
Well, how do people address, how the local officials at this point addressing that? Is there an effort to build more tech? Obviously, there's been a successful effort to insource jobs from foreign manufacturers.
Yeah, and I think you saw what Continental Tire as an example for South Carolina, bringing that to South